Hey guys, Boris from BK Forex. Welcome to the commodity dollar update for Aussie dollar, dollar CAD, and Kiwi dollar for July 31st to August 4th, 2017. And just like as with the majors, the COM dollars have a huge amount of data set this week, from the RBA rate cash decision to the New Zealand employment data to the Canadian employment data as well. So there's a whole bunch of stuff that could have major impact on the COM dollars. Let's take a look at the calendar first, and then we'll take a look at the levels. On the calendar, we start off with the cash decision on the 1st of August by the RBA. Nobody is expecting any kind of change, of course. No trade likely. It'll be interesting to see if the RBA begins to jawbone the Aussie. The Aussie now at 80, very, very high up. I don't think the RBA is comfortable with it. They want to see it at 75. To me, the Aussie is the single most vulnerable currency this week to potentially the RBA jawboning. So I really kind of like it as the exhaust trade amongst all the COM dollar trades as we go forward. New Zealand comes up next. We have the employment data coming up on the right after that on the first that day, which I guess would be the second to everybody in Australia and New Zealand. For us, is still the first. And then after that, end of the week, Friday, we have of course the we also on Thursday, which is Friday to you guys, we have Australian retail sales, which will be important as well. We'll take a look after PMI services how we feel about the retail sales, but generally Australian data has not been bad, which has been very supportive of the Aussie. But I still think the monetary skew of the RBA is going to be resolutely dovish, because I don't want to see the Aussie trade so high, especially after the dollar has weakened so much over the last couple of weeks. So to me, unless the data really blows out the numbers, it's going to be difficult to see the Aussie rally strong into this week. And then last, of course, but very much not least, the Canadian data set comes in same time as the U.S. Canadian data set has actually been quite good. We'll have to see. The market doesn't have a forecast just yet on what the number should be. Last time they ran in at 45,000, which was huge. If we come in anywhere near that level, that'll be very, very positive for dollar CAD, which has just been a runaway train. Has not been able to stop yet, and I still don't think it's quite possible to stop it just yet. Let's take a look at the levels here and see where everything stands. So to me, this 81.50 is a massive resist area in the Aussie, and that's where I think the Aussie is going to come into some very, very heavy selling. That's why being so close to this level, I think there's a chance here of failure the most amongst all the COM dollars. Dollar CAD, on the other hand, really every support has been broken at this point. It's still testing ahead of the 24 support, but it's very possible that we could really go all the way down to 22 before we find any kind of a meaningful bottom. And Kiwi, same kind of a thing as Aussie. The 75 has really been bumping up against that. It ran through it a couple of times, but still not really with any kind of force. The only thing that can completely change my mind, or the only thing that will make me completely wrong on this assumption, is if we have incredibly weak dollar data, and then we just have blow-off moves in both Aussie and Kiwi. Because remember, Aussie and Kiwi are just benefiting tremendously from the carry trade flow, meaning that if U.S. rates are not going to rise, the carry trade still stays in place, so you get all this new speculative flow into Aussie and Kiwi, irrespective of whatever happens on the economic front. And that's what's been pushing those currencies through multi-month highs. But the 75 was a really big stall in the Kiwi, despite negative news on the dollar, and 80. One, to me, looks to be a very, very toppy area for the Aussie. Let's take a look at the charts here, and I'll show you exactly what I mean. So let's start with the Aussie. So here's the weekly on the Aussie. You see we kind of flamed out at the 80s. We couldn't hold the 80s. Now we're 79.86 below here. This is up against essentially this level here. Now the high here is 81.63. So could we make another run at the 80s? Absolutely. But my argument here is I think it's a great scale up sell trade. In other words, you're selling 80, you're selling 80.75, you're selling 81.50 with a terminal stop probably above 82. If it gets up above 82, really if it gets up sort of, where you're just conclusively wrong, and it's a very, very long ride though. I mean, you'd have to really assume a huge amount of risk. It's really 83. That's the spike high over here. But I think 82.25, you'd be reasonable as a stop level here. And I think this whole zone is going to exhaust itself. So I like Aussie to the downside because I think it's kind of lost momentum as it tried to take out the multi-month highs. Same thing with the Kiwi here. Kiwi just really couldn't muster up a lot of move above 75. 75.50 I think was where it kind of flamed out. It's really trading against this resist point here. All of those points here are big resistance points. Here's the failure here. What was that? 75.64. So basically, to me, Kiwi above until 76 becomes a pretty decent sell at this point. This is sort of a spec sell on the assumption that 76 isn't going to clear. Again, all of this can fail miserably if U.S. data is horrible at the end of the week, and then all of these things can blow through the numbers. But assuming the U.S. data sort of holds or a little bit better than expected, the failure at these levels seems to be pretty evident, and I kind of really like these speculative shorts, both in the Kiwi and the Aussie. Finally, the CAD though is just a one-way trade. As you can see, it's just inching to test the 24s, and when you look at the charts, there is nothing here to hold it until basically the 22 level, and ultimately really sort of like the 20 level at this point. So this low here was 24.60, which we cleared in some ways. Could it stop here? Yes, it's possible. I mean, obviously, oil prices, coming down would also stop, but oil is going up. Caddy has had this massive move as oil was declining. So now you're going to have support of oil, and if you have supportive data, you certainly have a chance here to break the 24s, come down to the 22 level as a first real level of support here that you see in CAD. It's been a one-way ride. Trying to find a bottom here has been a sucker bet, and I don't think it's going to be a wise choice just yet until we see some concrete evidence. So to me, the level of weakness goes like this: Aussie weakest, Kiwi weakest, and CAD is the strongest in the calm dollars. That's how the week shapes up, and that's how I'd be trading it as we go forward. Wish you guys the best of luck with this trading. Boris, over and out.